A total of 30,000 options contracts on Plug Power right before earnings. What does this mean? In this video, we're going to go over this unusual option activity on Plug right before earnings. We have about 15 more minutes left until the market closes. Today is May 8th, 3:45 p.m. And let's get right to it. These 10:32 a.m. You'll see here when we open up that option chain, we can take a look at what this means. You'll see here 10,000 contracts, 10,000 contracts, volume all greater than the open interest here. Also on the put side, the 5 strike here, also 10,000 contracts. So what happens when you sell the 5 strike puts and you buy the 15 strike calls and then sell the 30 strike calls? And once we analyze this trade, you'll see that we have a rather bullish trade. And you'll see here as the price goes down, we're looking at the purple line here because that's what the date of the purple line is currently the date today. The blue line is for expiration. That's in 2025 because these options expired in January 2025. So when we look at it expiring tomorrow after earnings, it doesn't change very much. So that purple line is still a bullish line. And so you're here at the profit loss here. So anything above that is profit. So you'll see here on the x-axis is the price. So as the price, which is at 9.36 now, goes down, it will be below that profit loss on the y-axis. And so why did it do a trade like this? Well, let's take a look at the charts, because also when we look at the break-evens, you'll see here the break-even at expiration is all the way to $15, right? And also, if this goes down all the way down to $5, your loss is capped. You see the loss at expiration? It's only that $25 that you paid, that debit there. So let's look at the charts. When we look at the chart, you'll see here that Plug has not made it down to $5 for this year. Let's kind of zoom out 3 years. Has it been? Yes, all the way. This was all the way in 2020, in the beginning of 2020, May. It was at $3.08. We are near a support here, and so there is this belief that that we may not drop down below, because this was quite 3 years ago, and so maybe there is going to be a bounce up from this point on. And to reduce their risk, they're selling that 5 strike put, which then allows them to have a negative Vega trade and a positive theta trade, because these two Greeks, when they're negative for Vega and positive for theta, this is good for earnings trades, especially for Vega, because volatility will decrease and contract. If you've ever heard of IV crush, that's because Vega will decrease after earnings. And so this trade takes advantage of that volatility decrease. And so the way they're hedging this trade is, if it does drop, they would just have to wait through time, and theta will break even for them. This purple line will start to move up to recover their losses. As long as it is stays well below that 5 range, it should break even at expiration. Even if it goes to $4, the theta will still be positive, so it will still help reduce your losses if it does crash considerably down. But the thinking here is that there is this potential of rallying up, and that maybe they can take profits sooner, because if they don't take profits sooner, it would actually decay as time goes on. So you'll see that's one of the more unusual things about this trade. It's short-term bullish. However, they're using these very long-dated expirations, 620 days away, to play the earnings. Okay, so that's our kind of thought on plug. Let's look at the daily. So it's been kind of at the low of this year on April 26th. And so we'll find out in 10 minutes. So yeah, if you like this video, please smash that like button and subscribe if you haven't, and hit the bell icon. You'll be notified whenever we see unusual options.